After the Fed rate hike, we got a massive push in the market, which was a little bit surprising, but have we topped out? Let's talk about it with Riz. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap webinar. My name is Chris, and I'm part of Riz International, and we're a group of traders who are looking to try and better ourselves and gain financial independence through the market. And we had quite a bit of activity this week with the Fed rate hike and the rate decision. So Fed increased 25 basis points this week, and we saw a massive run up in the market. But Friday, we kind of rolled over a little bit. So that begs the question, is 4,200 going to be the ceiling for the market, or are we going to continue to run? I've got the man himself, Riz, with me tonight. Riz, what are your thoughts on this massive run up in the market in the last half of the week?
Ooh, what a run it's been. Massive breakthrough, that 4,000 level that we were talking about. And not only that, that teal trend line that's lasted for over a year now has been breached very bullishly. And of course, obviously past all the moving averages. So really, it almost seems like full steam ahead, right? But here's where it gets tricky. RSI is just touched overbought level officially. If it weren't for that Friday's little bit of a pullback, especially late afternoon that we had, it definitely would have remained overbought or in that overbought area. But technicals aside, I can tell you the jobs market and unemployment have been absolutely crushing it, and crushing it in a good way. Massive numbers of jobs added, way past what was expected by the economists and all the fancy people, that are looking to watch this stuff with a magnifying glass and who specialize in this stuff. Well, they were off the mark by quite a bit, and even they were a bit floored. How could there be so many new jobs? And well, that's a question that I think everyone is wondering the answer to. Not only that, unemployment is, I think, at like a 50, 60-year low. Think about that. 50 to 60-year low. I'm pretty sure, I don't want to generalize or assume, but I'm pretty sure 99% of us on this webinar, whether you're watching it live or the recording, are have not seen unemployment this low. So yeah, that's quite the achievement. But good news is bad news in this market, as it should be, because we have so many new jobs, we have so many people employed. What does that mean? That means we have a lot of demand, a lot of purchasing power, a lot of money in the system, a lot of people out there buying stuff. And I've said this many times before, the more people buy, the stronger the consumer is, which is a good thing. But when they're too strong and they've been strong for too long and they're buying and buying and buying, guess what? You have massive amounts of inflation. And that's what the Fed's been trying to get a hold of for the last year. And that trend, or that, I would say, that agenda continues. How are they going to do that? They got to have people out of work. I've been saying this, the Fed's goal is to get people out of work. But the problem is that's not working. It's not working. I feel like they need to go higher. And the market was and has been pricing in that the rates are going to go lower. So it's quite the opposite. And I feel like the market really hasn't factored in that perhaps Jerome Powell and the gang, the Fed, might actually continue to raise rates. They said so. Jerome Powell said so, that they're probably going to raise rates again, most likely 25 basis points. But still, we're still in a rising rate environment, and the markets are rallying as if like, we're going back to 0% rates or something. It's wild. It's wild. And I'll highlight this a little bit more. Not only do we have unemployment, let's say 50, 60 years lows, I don't think it can get any lower. So what does that mean? That means unemployment can go a little bit higher. That also means, potentially job market should be slowing down. We're very much going to be keeping an eye on CPI, and I think Chris will share the calendar, economic calendar later. But we got a lot of uncertainty that continues. We can't really put our finger on it. The moment we think, okay, this is going to be predictable, boom, out of left field, can't predict it. No one saw it coming. Here we are. So this is very, very tricky. I wish I could say, what's going to happen, but dissecting it, and looking back, I feel like this pull up here is just a bit too much for my liking, to the extent that I've said, you know what, let's take profits. I've been telling elite members to, book some profits. And I'm not saying you have to take everything off and completely sell everything, but profitable positions, if you have them, it's not a bad idea to take some gains. Just because we're past these trend lines and these moving averages doesn't mean everything is a-okay and we're going to see all-time highs. Okay, don't make that assumption, because that's not how it works. So I've been taking profits. I've been recommending others to also consider doing that. Again, it's their choice. And I myself, as I've said many times, and lead along with even before in the webinars, I've said, I'm 85% cash, but after selling some profitable positions for myself, I am now 95% cash in my trading account. 95%. So what does that tell you? That tells you, again, I can be wrong. I will say that first, but that tells you that I'm anticipating this rally to eventually fizzle out a bit. Maybe Friday was that first, match. I don't know, but I do feel like the market is very much overdone. Really shouldn't be anywhere near 4,200 if you ask me. The economy, I doubt, is going to have what's known as a soft landing, where we have a very, very mild recession. I don't think that's going to be the case if the Fed continues to raise and keep rates at these levels. I just don't think we see a soft landing. And really, we're the Fed and the economy and us as consumers and individuals who are going to be obviously impacted by this have no choice, where rates need to remain higher than, for longer. The Fed needs to probably raise rates a little bit more, because the flip side is that we're going to be in a whole new bubble once again.
And I think that's really the strange thing was, like, Powell was saying, like, yeah, we're going to have to keep raising rates. And I think everybody's like seeing that and thinking it's like, oh, well, okay, they're going to raise rates, but it's not as much as we thought. But the thing is, the rates still need to keep going up. And I think that's really what caused a lot of confusion, because he's saying one thing and the market's reacting completely opposite to what you would expect. And it's very difficult to predict right now. And I'll tell you, anybody who tells you they can predict it, they're full of something that I can't say on the air, but I'll just say they're full of it. That's for sure. Because I don't think anybody would have predicted this rally here after, an interest rate hike and the Fed basically saying, yeah, we're going to have to keep going. I think, like you said, Riz, everybody's expecting this soft landing, but I don't think it's really feasible at this point.
Yeah, you're right, where it's unpredictable and no one could have said this, no one could have predicted this. And to put some more context into it, the Fed and Powell specifically on Wednesday said, we're gonna raise rates some more, and he was pretty hawkish in the sense that he didn't really say, okay, we're gonna stop the hikes, we're gonna let alone pivot and drop rates. That wasn't mentioned at all. But you would think that, okay, the market would hold firm or go lower because some new information has presented itself where he's going to continue to raise. But nope, continue to go higher. Why did it continue to go higher, and what can we glean from this? That means that the market is essentially giving the finger to Powell and saying, yeah, we don't believe you. It's saying we don't believe that you are going to continue to raise rates or keep them at these levels for too much longer. They are the market as a whole. Remember, the market is a construct, right, of millions and millions of different participants across the world, individual traders, firms, institutions, you name it. As a collective, they're essentially saying, nope, we don't believe it. Think you're bluffing. Think you're going to not raise rates. We think you're not going to, be aggressive with it. And that's what they're signaling by going on a massive buying spree. Remember, prices going up, if stocks, index going up, what does that mean? More buying pressure, right? So we should also keep in mind that there was quite a few institutions that were, net short, and not only that, they had a lot of cash on the sidelines. Well, guess what? With some of this pickup past the 4,000 level, they started closing their shorts. They started, buying. So there's no doubt in my mind that a lot of institutions were like, "Oh my God, we don't want to, you know, miss this rally." Ultimately, getting FOMO. Really, there's no other way to say it. They started buying, and when you have mass buying, like we've seen over the last couple of weeks, that's what this kind of trend line looks like, upward straight from the start of 2023. So it remains to be seen if it holds. Because it's a really, really big breakout here, and we won't know until we start getting some more macro data, and once some of the Fed speakers start coming in and saying stuff, because we know they're going to talk. We know some of them are going to come in and have some of their little interviews and little uh, you know chit chats. So we'll see what they have to say, but I can tell you firmly that I'm not participating fully in this rally. I don't really feel like there's any basis for it. Again, I could be wrong, but I'm okay. I'm okay with missing it if it goes a little bit higher, past 4,200, maybe 4,300. I'm okay. I'm okay sitting back, reassessing, being patient, because I do feel like there's more downside.
No, I mean, that's a really dangerous situation when the Fed's saying, hey, yeah, we got to keep raising rates, and everybody's saying, no, I don't necessarily believe that that's going to happen. And this is really the danger of chasing right now. Like you were talking about, Riz, basically FOMO. And that's the worst thing you can do. And if you're not familiar with that term, that's fear of missing out, FOMO. Pretty common, but if it's your first webinar and you haven't heard that before, that's what it means. Let's take a quick look here at the breakdown of the S&P 500, kind of see what's going on with this rally. And kind of the one thing that's not going on with this rally is energy is starting to dip a little bit. Not too bad, though it is almost about a 10% drop here since about the 26th, so at the end of January here. Taking a bit of a dive here on energy. It's definitely got some room to go, that's for sure. But we got healthcare and utilities as well, kind of starting to look towards the downside a little bit. Wow, a couple of the other ones are starting to, look pretty decent. Financials starting to move up pretty nicely, and these ones that are here are all underperforming, making a massive rally, here in the beginning of the year. We've got tech, real estate, we've got consumer discretionary, we've got communications. All of these looking really good, really starting to push back up towards the upside and get a bit closer to, performing with the market. Riz, what are you seeing here? What about this, really interests you so far that, we're seeing in this rally?
Yeah, this is a bit of a expected thing, obviously, where everything, all the major sectors that were very much pummeled over the last year, making a bigger comeback, making a bigger rally than, let's say, things like utilities and things like healthcare, which are a lot more lower beta, a lot more slower moving. So not surprising at all. I feel like if the market, the SP 500, pulls back, of course, it's going to bring down everything with it, and especially if we get like a sell everything type of drop. We've seen those before, where we've seen commodities, um, all sectors pull back. So it remains to be seen if that's something we ever do get. We had that last September, um, which is not uncommon for to see these things in bear markets, where you see a sell everything type of fade. So I wouldn't be surprised if we do see one, but yeah, nothing right now is too shocking in regards to all the other sectors moving up. Utility going negative is not surprising either, because we saw a lot of aggressiveness, a lot of risk appetite come back into the market, right? And when risk is high, people are not going to be buying utility stocks and stuff like that, or even XLP, which is consumer staples. They're going to buy stuff that's discretionary. They're going to buy tech. They're going to buy all that kind of stuff, right? So not surprising at all that that stuff's picked up quite a bit.
All right, let's switch gears and take a look at some of our asset classes that we keep an eye on. And oil kind of looked like it topped out here right around 81.50, 81.60. Then we kind of started to slide back down here, closing on Friday right around 73.40 per barrel, while gold had been on this massive, massive rally. And then, holy cow, what in the world happened on Friday here? Huge, huge sell-off in gold. Really getting a strong rejection of this area up here right around 1950. Riz, what is going on here with these commodities?
Yeah, oil pulling back a little bit, not too surprising. It was looking a little bit weak, and I said, you know what, if it continue that trend, it could go higher above 85, but nope, not even close. Didn't even, make it there. It was just holding that 80 level and then pulled back. So could maybe hit that 76 or what is it, 75 area support zone, maybe even 70. So no trade yet. No trade yet. I wish I could have gotten in, played the fade lower, but I didn't. And speaking of getting a fade lower, I even missed this gold pullback, that big 2-day pullback that we saw in gold prices. And although I was thinking of considering a short, I think it was last week, Chris. I can't remember exactly, but I think I said, you know what,
Yeah, you
let
mentioned
me
that.
see the pullback. I was hoping to get in. Didn't really feel I had much conviction, especially with the markets and the Fed catalyst coming up this week. So I'm like, you know what, I don't want to mess with commodities too much, because obviously what happens with interest rates, what they say can impact commodities along with the U.S. dollar. So I was like, you know what, I don't want to bet against this freight train. I don't want to be exposed to this coin toss, which is, what, we don't really know what's going to happen, right? It's a catalyst for a reason. So I didn't get in, and well, guess what? We saw this I don't know, sub 3% or so pullback in in gold, or maybe even a little bit higher, maybe a little bit more than 3% even, if I'm not mistaken. Yeah, but they're, yeah, 4.5%. Yeah, that's pretty big in a couple days. So very, very interesting to see commodities pull back a bit, but we'll be keeping an eye on it. But for now, no trade.
All right, let's switch gears here and let's take a look at the bond yields a little bit. Kind of see where we're at with that. And, we're starting to see, looks like the 2 year is starting to perk up here over the last couple of days, kind of following the market a little bit. Same with the other two as well, as the 10 and the 30, both starting to kind of, turn upwards from that slight downtrend that we had been in. And then, dollar as well, starting to look like to strengthen a little bit after that bounce in the market. Is really this just everything just following the S&P 500 at this point, or is there something more to this?
Yeah, so the Federal Reserve decision impacted quite a bit of that. So when they went a little bit more hawkish, like I said earlier, when Jerome Powell said, we have more rate hikes, we're not planning on pivoting yet. Uh, we saw we saw bond yields tick up a little bit. Not only that, we saw the U.S. dollar get stronger. I've said it before, I'll say it again. Usually, not always, usually when we have higher interest rates, more rate hikes, the US dollar does gain some strength. And you can see that over the last year, obviously. It's not a one-to-one correlation, it's not exact, but generally speaking, right? So not surprising that these things went up. And of course, remains to be seen if it's a viable trend. Do we see yields come back up? Let's say, do we see the, you know, 2 year and 30-year move back up? And do we see the 2 year at 4.5? It remains to be seen. And do we see the dollar get back to where it was? I don't think it's going to quite get up there where we saw that 115 on the index there. But I wouldn't be surprised if we goes higher, especially if we see uh, the market go lower. If we see the market go lower, you can expect the U.S. dollar to get a little bit stronger, plus bond yields to go up.
Riz mentioned earlier the economic calendar, and actually this week it's looking to be a little bit quiet on the economic numbers, though. I think, if I'm not mistaken, CPI is next week after that. I'd have to double check. But
Yeah.
yeah, this week, not much going on.
Yeah, I got my week messed up. Not this week, but the week after. We have CPI data for January, so that will be interesting to see. First month of the new year, right? Where are we? And of course, that's going to factor in some of those those jobs increases. We're going to see that. So the good thing is, though, we've seen a little bit of a pullback in oil prices, gas prices at the pump obviously will matter, and lower means a lower CPI reading in that sense. So it will be interesting. We've got a strong workforce, unemployment very, very, very low. We've got commodities also a little bit lower. Oil is lower. So it will be interesting to see how that factors in and what the estimates are for CPI. But by looks of it, might not be too good, because if we're continuing to see a strong, uh, consumer, that just means that inflation may not be dwindling as much, and I think the market hasn't factored that in. So it's gonna be quite the surprise in the next couple of weeks.
Now, one thing that is on everybody's mind right now is earnings, because we are in the heat of earnings season and we've got a lot of big names reporting again this week. Now, of course, we had some of the big ones last week. We had, Meta, we had Alphabet, aka Google, we had Amazon, things like that. But we still got a lot of earnings to report. And Riz, kind of what are you looking at this week? Because there's a lot of names on here.
Yeah, a lot of names on here. Activision Blizzard will be interesting, even though they're still in that whole merger acquisition, not a merger, but a buyout by Microsoft, which has been pretty stalled and going through quite a bit of resistance with regulators. So it'll be interesting what that happens with that. Um, we have Take-Two as well, another game company. Again, these are more of the smaller companies coming in. BP is oil. Will be interesting to see that. But I wouldn't be surprised if they also have some amazing numbers, just like Exxon did and Shell did, record numbers, which insane number of profits, billions of profits. It's unbelievable. So we got that. We got Uber will be interesting to see, and of course we got Walt Disney. We got Disney here. That's going to be one that I'm keeping an eye on. Um, and special mention to the ones right there on Wednesday after close. Chris is kind of circling it here. That's definitely a big one there. That'll be fun for everyone. But Thursday's looking exciting as well with Pepsi, which is going to be interesting how that goes. And PayPal. I don't know how that's going to go. It's been an absolute dud, but will be quite a bit of volatility. I think you could always expect PayPal to move big. But yeah, very much less of a, I would say, big boy type of week. Those are all pretty much done. So smaller companies, a little bit more muted, a little bit less exciting. Um, so after this, we got, I think, another week where we got some companies still reporting, but after that, that's gonna cap off the earnings season, and then we're gonna wait for another 2 3 months.
All right, I want to go ahead and open up the floor to questions for anybody who would like to post their questions and have Riz answer it for them. Now is the time to go ahead and put them in the chat. While we're waiting for things to come in, Riz, is there anything that you'd like to talk about? Obviously, it's been a very difficult time trading. This first month of the year with everything going on. Now, of course, looking back in hindsight, you can be like, oh, well, obviously you should have been long because obviously it was going to go up. But, looking back on everything, it's real easy to say that when you're in the moment, it's a lot more difficult. What advice would you give to somebody who's really struggling right now with kind of figuring out what's going on with the market?
Great question. So we know it's tough. We know it's tough, especially last year, and this year continues to be the same, where it's very tough to interpret what's going to happen. A lot of people are messaging me, Riz, but unemployment's so low, job numbers are so strong. Isn't that amazing for the markets and economy? And generally, yes. But in an environment like where we are now, where sometimes good news can be bad news, because it's from a perspective of inflation, anything that can keep inflation higher um, is negative. So the question now becomes, will the market start factoring that in? Kind of like when I bring it back to uh, last year, there was a time when markets were just feeling, super bullish. Take a look at July, right? Um, June, July, leading into August, very bullish. If you looked at it at that point, you're like, oh my God, what the hell? Bear market canceled, recession canceled. Wow, look how that turned out, right? Eventually went lower, set a lower low in September, October, right? Am I saying that's exactly how it's going to play out? No, but wouldn't surprise me if we eventually do see a pullback. If we see a pullback from here, this 4136 level, 4,000 in that area where I want to see. If we go a little bit lower, maybe start getting in, scaling in, because that can be a nice support level there.
All right, Joe has a question about oil companies. He said, a lot of other oil companies are having good earnings, record earnings, no less. And he's wondering if maybe we should be looking at an earnings play on BP. Well, let's take a look at the chart and see what Riz thinks.
BP, yep, sure. Okay, what do you got? Yeah, so it's a good question. Earnings play, BP. We know that them having good earnings is pretty much baked in. I think it's not a surprise that they're going to have great earnings. Just like it wasn't a surprise that Shell and Exxon had good earnings. But does that mean if there's a trade to play earnings? I don't think so. Personally, I don't think so. They're just off all-time highs, or highs at the highs. So I don't feel like there's much to be had as it is from playing earnings, especially when you have something like BP where, solid earnings are a given. I highly doubt they miss. It's really going to come down to their guidance. I don't think guidance is going to be too bad. So really it might be a non-mover. At that point, you're just going to get burned when you buy options, right? So not really my cup of tea, not really, looking at it from a earnings YOLO standpoint. You can, but not the best.
Well, I think this is the one thing to kind of touch on with earnings is it's so fickle. It's like even if, the EPS or earnings per share is good, guidance looks good, sometimes, everybody decides to sell because, well, it's not as good as we thought it was going to be. So there's a lot of, there's more to it than just the numbers. If it was just saying, oh, yeah, they're going to beat, then of course we'd all be millionaires at this point because it would be fairly easy to kind of ascertain which way it's going to move. But it's just there's so much more that goes into it on earnings day than just like, are the numbers good or not?
Yeah, absolutely. And sometimes that's why we say if you can be right on, them beating and everything, but still not make money, you can still lose money, especially from an option standpoint. 'Cause there's so many variables, and that's really why I always say it's a toss up, it's a coin toss. You can be wrong on the earnings result and then make money too. End up being that the stock goes your way ultimately. That can happen too. But
Yeah.
anytime it comes to earnings catalyst, whether it's interest rate decisions, whether it's earnings, whether it's any major catalyst, we know that unless someone's operating on information that everyone else doesn't have, it's extremely binary. It's kind of like a coin toss. It's random. 50-50 is the best way I can explain it. And I don't know about others, but I don't want to be exposed to an event that's random or 50-50. I want above 50% odds, and higher the better. And that's really how I look at it.
That's a great way to put it, because 50-50, you're really not making any progress for the most part. All right, Sankey wants us to take a look at a quick response on Walmart and Tesla. All right, we'll make it really quick for you. I'm just kidding. We'll take a dig into it. Walmart here, one of my personal favorites, biggest brick and mortar store in the United States. Looks like we're just kind of sitting on the 100-day moving average here after this big sell-off going into Thursday and Friday. Looks like we got earnings coming up here on the 21st. Walmart in a bit of a downtrend here, I would say, over the last couple months since December. What are you thinking on this one, Riz?
Yeah, I would wait till 130-ish. I considered buying it too, but I held off because if the market does get a pullback, I assume Walmart will pull back as well. So although it's a great, fantastic company, not the worst price to kind of get in, but I feel like we could do with a little bit of a pullback. That'll make an entry a little bit better. So I'm waiting to see if it comes back down, and of course, waiting to see where that lines up with earnings.
That'll be a big question. As you can see, Walmart can be a big mover on earnings, so just be aware of that. All right, let's take a look at Tesla, everyone's favorite. Here we go. All right, so Tesla seems to be curling up here. Since let's see, right about the beginning of January, we kind of hit the bottom. Looks like we're starting to curl up. Looks like earnings were okay, though. Looks like we missed a bit on revenue, and it looks like we're having some problems busting through the 100 moving average here.
Yeah, very technically overbought now, as you can see. Very large rally, really quick, fast and furious. Just, not surprising at all when it comes to Tesla. But for those that did play, for those that did get in, congrats to them. If you're able to make that run up, that's great. For me, I'm not a buyer at this level, but I'm also not going to go and short Tesla. At 190, I'm not going to go short it. I'm not going to bet against it yet. The only time I ever consider doing that is if there's a lot of uncertainty in the market. Markets are pulling back. I see a hard rejection of this 190, 200 zone, and I get a couple days, maybe one at least, red day. Then I consider it. But other than that, I'm not going out and trying to short it on Monday. And maybe a couple days after if the technical support it. And of course, now that the earnings catalyst is done, we don't have to worry about that. So again, that's my quick and dirty analysis of Tesla. No long, no short just yet. I wouldn't want to chase the long here. Just not my style.
Definitely, I don't blame you on that one. Chasing Tesla is always a dangerous proposition. All right. Yas has a pretty big question. He says, how's Netflix looking in terms of a swing trade to perhaps 400? Let me finish reading his question. With a stop loss around 350 if the market is to keep pushing. It filled the gap and has shown good strength since then. Let's take a look here. Yeah, so Netflix is definitely, dipped pretty hard here on earnings last year in April, and really just been kind of clawing back up here ever since. Though, I mean, here's my personal opinion. Since Henry Cavill left The Witcher, there's no reason to buy Netflix stock. But I'm sure that Riz has a more sophisticated view of it, in my opinion. So, Riz, what's your take on Netflix here?
Yeah, I don't think it's the worst trade, for a momentum continuation. This has been a tremendous trend, upwards trend with, it goes up, has few little pullbacks, but then it continues to set up higher highs. So from a technical trend standpoint, as clear cut as it gets, very much possible to have an entry with a 350 stop and 400 price target. Not bad at all. Pretty, uh, pretty clean if it keeps pushing. One thing, obviously, which you already know, Jazz, is that even at this level, at 335 or sorry, 365, it's overbought, and not surprisingly, it's overbought. Earnings were somewhat okay, not the greatest. They've had some negative press recently with the whole password sharing nonsense, and you
Mm-hmm.
can look into that. Um, and I think they've come out just recently. I think maybe it was today or yesterday, and they're like, "Oh no, no, might not be putting that policy into action just as it was stated online, kind of like PayPal did um, with their misinformation, whatever, fine." So they came back and kind of did a little backtracking. You can look into that, but that's not ideal. I'm not too thrilled on Netflix at these levels even. Um, we've seen Reed Hastings step down, although he's going to be still on the board, I think, as a chairman. But yeah, purely as a trend momentum trade, sure. With a hard stop, absolutely fine. Other than that, uh-uh.
Fair enough. All right. Abhishek wants us to take a look at Amazon, and he wants to know your thoughts on what to take away from its earnings.
Hmm.
Yes, Amazon
Amazon.
kind of getting killed here.
Yeah. Yeah. No, go ahead, Chris. Sorry.
No, yeah, I was gonna say, pretty hard rejection of the 200 simple moving average here. Massive rejection on earnings. Looks like earnings were not too great, but revenue was okay. I mean, a paltry 3.5 billion extra lying around. I mean, Bezos obviously has that in his couch cushions. But yeah, like what's going on with Amazon here? I thought everything was great.
Yeah, from the fundamental standpoint, I'll put some insights into it. I don't know if but ultimately Amazon took a big hit on the books from their Rivian investment. So that was a significant drawdown that they took. So that's one of the reasons why their revenue was demolished this quarter. Take a look at that, right? Big miss. Sorry, their earnings, not revenue, earnings, because of that Rivian loss. So they took a loss on the books for that share, and not surprising. We had anticipated that, and this pullback here just from a miss. I think it can potentially go lower. I like it below 100. So kind of waiting there for that entry. If the market pulls back, absolutely this can go lower even more so. So keep an eye on this. This is a great company. Not the best opportunity compared to something like Google, at the right price. Even Apple, I feel is like a little bit overdone. So that very much could do with the pullback as well. But yeah, even these amazing companies, although they're not bad entries, they're not, I would say, like overvalued or anything crazy. But they're kind of getting to the point where I feel like, in this economic backdrop with everything going on, not the most confidence inspiring entries for a swing to medium term trade. For long term, buy and hold, forget it, for like a year or 2 years. Okay, sure. But for those of us that want to be a little bit more strategic with our entries and exits for a short term, medium term trade, I'm not very confidence inspiring. And of course, I will say that yes, I can be wrong, uh, but I like to think I'm more right than wrong, and I think my track record proves that.
Definitely, I have to agree with you on that one, Riz. Definitely, really not an awe-inspiring entry here on Amazon. And for those of you who don't follow Riz on his Instagram, make sure you do click that link in the description. He left a little meme for you on Amazon, so you'll appreciate it when you go check that out. That was a great one. I like that. So, but I'm going to make you go click the link. I'm not going to show it. All right, so I'm seeing that's about the end of the questions that we have here on webinar. I really want to thank everybody for coming out. It was great having everybody on the live webinar tonight. Riz, what are your final thoughts you'd like to share with us?
Yeah, let's see how this goes. I'm expecting a bit of a tricky week. I know we don't have too many economic events, but from a technical standpoint, this is a big one because hot off this massive rally, I don't know if we can sustain it. So it'll be interesting to see how it goes.
All right, so let's be cautious this week. Let's keep our eyes and ears to the ground and see what happens. And we'll see you in the market on Monday.